You use some pretty provocative language about business owners needing to restructure or divorce their relationship with the IRS using tax codes and legal structures and all that fun stuff. What do you mean by that, and how did you develop this philosophy about the relationship between successful entrepreneurs and the current tax system?
Yeah, well, let's just put it out there. I'm not an attorney. I'm not a CPA, so I'm not giving legal advice or recommendations as far as what to do, tax-wise and that. So I'm always 100%. Upfront with that. What I have is the knowledge on this whole structure that we're going to talk about today. So as far as my whole philosophy is, how do we get business owners or people who have a lot of assets, a lot of wealth, how do we get them to divorce the IRS? Now, some people will say disinherit the IRS. Divorce is more strong in my world, right? The thing, Joey, is there's nothing wrong with avoiding taxes. The IRS says you can avoid taxes as long as you take advantage of the tax code to your benefit. What we don't do is we don't evade taxes. Tax evasion is illegal. So let's just put that out there, right? So we're not trying to do anything shady or anything, but what you're going to find out today is, this is one of those things. Why haven't I heard of it before? This is too good to be true, right? But here's the thing. The ultra wealthy have been doing this. That's why the ultra wealthy pay the least in taxes compared to their income. They're taking advantage of the tax code. And the thing is, most CPAs don't even know this stuff. They're just doing the bookkeeping. They're doing, they're not strategists. They're not looking, they're reactive versus proactive. You're paying a lot in taxes. Oh, maybe next year we should do this. No, right? So my job with my clients is, how do we keep the money in the family? How do we keep it in our possession? Because we can do a lot more with it for our use versus giving it away. To Uncle Sam, the tax man, right? He is your silent partner. He's not your uncle, guys. He's not your uncle.
That's true. We got to rename that one. But Michael, tell me, how or why do the ultra wealthy pay that low taxes when they make more money, and why do business owners think it's so out of reach to get the same strategies as them?
Well, here's the thing. Unless you are surrounding yourself with the ultra wealthy, you will never learn about these strategies, right? So my goal is to bring this more mainstream, because there are a lot of wealthy people. It doesn't mean you have to be, double millionaire digits, right? You could be a $2 to $3 million millionaire, right? And you're going to learn some of this strategy. It is about taxes, but it's also about protection and not losing control. Have you ever heard of the coined phrase by John D. Rockefeller, own nothing and control everything? Okay, that's what we do. On paper, our clients, anything that's in your name is up for grabs, right? Even your business, whether it's a limited liability company, whether it's an S Corp, C Corp election, or a straight S Corp, C Corp, LLP, your business can be sued. You have a lot to risk. Now, then there's the other side, being sued personally too. There are no protections, okay? But what you're gonna learn about today, if somebody sues you, they can't get one penny in what we're talking about today, okay? So it is out there, and why haven't people heard about this? Well, I will tell you, I'm just a marketing arm for an insurance, it's not insurance, attorney firm that holds the copyright to the specific structure. Okay? I'm a marketing arm. There are 15 active distributors in the country that can market this. So you're not hearing it because you have to be invited to hear about it. Either you have to hear something like this, right? You know, somebody listening to your podcast. Somebody has to introduce you to me, or somebody like me, or maybe we've met through some other way. But you had to make a connection some way or somehow. This is not mass marketed out there, and that. So. Yeah, I mean, you know, there's a lot of we're gonna unpack. You know, I don't really want to get into the weeds, but just know this is, you know, my background, Joey, is before coming into the insurance financial world. I'm a former teacher. Okay, I just educate people, and I try to keep it as simple as possible, which doesn't. That's not hard for me to do because I taught elementary. Okay, 20 years ago. Right. Yeah. I just tell my clients, you know, I'm just a glorified educator that gets paid more than my wife for helping people save money. You know,
that's really good.
But I also tell clients this because Safe Money Solutions is exactly what it is. Everything that I offer my clients, number one, I own myself. So what we're talking about, I have to be a consumer of this product or service before I take it to a client. Why? Because I believe you need to own what you're pitching, preaching. You know, preaching. Okay. There's too many salespeople out there. I don't know how people can do what they do and they don't own a product. And then we're being proactive as much as they want to be and filling in those potholes permanently so they don't creep up again. Okay. And as you know, in the insurance business, there's some things you can get and there's some things you can't get at some point. Yep. Right. If you're healthy, you can get life insurance. If you're not, good luck. You're on your own. Right. Or you're going to pay a lot more because now you need it right before something happens. If you can't get it, it's going to cost more because why? Because you're older, or the taxes are more, or whatever. Right. So why not mitigate as much risk as possible, put you in a better vehicle, so you already know what's going to happen if something jumps out in front of you, a deer. You already know. Okay, that's all I educate people on. Okay,
so that's good. I know a guest was saying that that's one of the only thing that you gotta pay with money, but also with your health, right? And sometimes your health might cost you a lot more.
You can be, I don't care how rich you are, you can't buy your health. Yeah. Now you can do things, but sometimes it's irreversible, right? When you get to a certain point, you can't do things, right? But there are a lot of things that people can do where they can get requalified, but it's probably not going to be they're not going to get the best outcome had they done it earlier, right?
Best deal. Stuff. Mm-hmm. Yeah. Now, Michael, I'm thinking right now, like, let's say I'm a viewer, I'm a business owner watching this or listening to this. Like, I got a big pain point. I'm paying 30, 50, 100,000, 200,000 in taxes every year. I don't know what to do. You're telling me about those ultra wealthy and that this could be accessible to me, but then that this is not mainstream yet, right? Like, not a lot of people know that. My next question is why is that not mainstream if that is such a good strategy that everybody should have? Why is that not, like, that sounds too good to be true that some people might say. Why is that the case?
Yeah, I think, so first of all, the law firm that holds this copyright, first of all, this was it's a trust structure, okay? Yeah. And we'll get more into it. Yeah. But they were the first. This was the first contract ever copyrighted back in 1999. Okay. And it was created back in the 50s actually by a Harvard professor, a combination of a Harvard professor whose background was on trust. Let me make sure I get this right. On trust law. Okay. And that was Austin Scott. He wrote the book on Scott Trust Law, which is still being taught today in probably estate planning and contract law and stuff. Okay. He partnered with a fellow who worked on Wall Street in the financial, and his forte was contract law. Now this is very unique because they joined this together. So here's the thing: most contracts out here as far as trusts go, they fall under legislative and tax law. This is under contract law. So the thing is, there are very few people, attorneys, that are educated on contract law. Okay, and you're going to find out that there are a lot of benefits of this being under contract law, that you get a lot of benefits when it's inside that type of contract versus, something that's not, that falls under tax law or legislative law. Okay.
Understood. Okay.
And that. So let me kind of back up. So I learn about things by reading, by surrounding myself with others. Just like what the Rockefellers did with life insurance, right? I had to go out and find it. I actually had a couple friends, and one moved away. I'm in Iowa. She moved to Colorado, and she reached out to one of my colleagues in the same city I'm at. I'm in Cedar Rapids, Iowa, and she was educating her on this this trust structure. Okay, so that's how I learned about it. Right? Okay. I had to know somebody, or somebody had to think of me to introduce this to myself. Okay. Mm-hmm. Which is the same thing with anybody that comes on here, right? You have to be introduced to it. And she was a direct distributor. She is no longer, and I have taken her place along with my other partner in that. So, but she and her partner educated us in that. But because this is, again, it's not a new concept. It's just new to me, right? Yeah. And I don't know where I was going with that. So. Why haven't people heard about this? Here's the thing. I'm one person, right? I can go out and meet with individual people. It's just going to take me longer. Yep. I believe I can help other advisors and their clients by working with those advisors to bring value add to their clients that nobody else is doing. Not their CPAs, not their financial advisor, not their accountants, and all that. And it's a win-win, right? The client wins, the advisor wins, and I as a distributor win. Okay, nobody loses, and that's how I like to do business, right? I'm not one, hey, I'm going to do this because I make money. There's enough of those people out there, believe me. I don't need to be one of those. I tell people, Joey, I can sleep at night. Knowing that I did not do wrong by my client, right? Because guess what? I'm not in the sales business. Even though we are, I'm not. I'm not looking for sales, right? I'm not looking to sell things. I'm looking for people who see value, and guess what? And I want to work with their future generations, but more importantly, they have relationships. If they're happy and saving all this money that I'm going to tell you about, that's a lifeline, right? They're helping their friends, they're helping those families, or they're helping those businesses, even competitors, right? These guys go to the same associations or the same conferences, just like Joey and you and I can go to a conference. We're competitors, but really we're not, right? We can pour into others and reap the benefits, right? Or we can keep it all to myself. It doesn't do anything to keep it to myself. It's no different. I have boxes of business cards in my cabinet. It doesn't do any good in there, right? Yeah. I just give them out, right? Like candy, right? Yeah. And that.
So basically the reason about is you would say that it's not that mainstream is that the people that owns that information, that contract law, is finding, right? At least right now, there's not a lot of people that has that. It's through different relationships and network access that this these processes are shared, and then it's just to find the right team and the right person that can help you with that type of planning, right?
Yeah, and that's all I'm saying is, I rather be in my office working with other advisors, right, adding value to them. And adding value to their clients versus, going, like I'm going to be traveling to all these events where business owners are. That's time and money, right? Yeah, for sure. My time is worth more or more valuable to me to to be working with people who already have relationships.
Yeah.
You know,
really
and they
good.
don't have to be the expert. The client doesn't have to be the expert. We have the experts. We have in fact, the people that do our tax returns for these trusts own the trust themselves, and they do the taxes for the trust.